So we have the balance sheet first. So I'm going to put it as part 1. That's how the format is. Part 1, form of balance sheet. Form of balance sheet. Then we have the name of the hotel. So here I think it is Decent Hotels Limited. Decent Hotels Limited. Decent Hotels Limited. And then we have balance sheet as on the date is 31st March 2003. 31st March 2003. Okay. So you have the particulars. Note number, and particulars, note number, and amount or figures as on 31st March 2003. Okay. Those who are solving with me, who are simultaneously doing with me, maybe you could leave around some half a three-fourth of a page or one full page for the balance sheet. Below the balance sheet, we are going to have the notes to the Below the balance sheet, we will have the notes to the balance sheet. So you can leave around 1.5 page. And then we have the profit and loss account. Okay, so below the balance sheet, we will have the notes to the balance sheet. So leave space for the notes. Those are solving with me. And then we will have the profit and loss account. So profit and loss account becomes part 2. Profit and loss account becomes part 2. Form of profit and loss account. Form of profit and loss. Form of, they put it as statement of profit and loss. Decent Hotels Limited. Profit and loss statement for the year ended 31st March 2003. Profit and loss statement for the year ended 31st March 2003. Okay. So now we'll have to start doing the notes. So we'll have to start in the order. So you have to know your format for this. Okay. So note 1, we are going to start with the balance sheet note since we have the balance sheet first. So note 1 will be shareholders funds. Note 1 will be shareholders funds. Okay. Sorry, not shareholders funds. It will directly be share capital. Shareholders funds is the heading. Okay. Shareholders funds is the heading. It will directly be share capital. Now under share capital, they've already given us some information. There is authorized capital and there is the actual share capital here. So the share capital given in the balances is the issued, subscribed, called up, paid up capital, and authorized capital is always given in the adjustments. So authorized capital does not form part of the total, it is just for information. But we have to write it there. So we're going to put it as authorized capital. Okay, it is 80,000 shares, 80,000 equity shares of rupees 10 each. That's what's told to us. Yeah, 80,000 equity shares of rupees 10 each, which becomes 8 lakhs. Which becomes 8 lakhs. Okay. Similarly, we have an authorized capital. We always close like this because we don't consider it to be part of the total. Okay. And similarly, we also have issued. The next one is issued, subscribed, called up, and paid up capital. Issued, subscribed, called up, and paid up capital. Now, in this case, issued, subscribed, called up, and paid up capital. The total capital given to us is 6,50,000. So I can easily say that the number of shares is 65,000 equity shares. 65,000 equity shares. 65,000 equity shares of rupees 10 each. So this is what we are going to take in the total. This is what we are going to put in the balance sheet. Authorized capital is just given for information. This also down. Authorized capital is just given for information. Okay, issued, subscribed, and called up capital is what we are going to take in the balance sheet. So we are done with the note on share capital. Okay, next note is after share capital we have reserves and surplus. Note 2 is reserves and surplus. Reserves and surplus. Okay. Now, in the problem, we don't have anything. If you remember, yesterday we have not discussed anything that goes in reserves and surplus from here. But can anyone tell me what will come under reserves and surplus? Can anyone tell me what will come under reserves and surplus? We don't have anything in the balances given to us, but can anyone tell me what will come in reserves and surplus? Can anyone tell me what will come in reserves and surplus? What will have to come in reserves and surplus? What will come in the reserves and surplus? Very good. It's going to be the profit and loss. So once we are done with the profit and loss, the answer of the profit and loss account will either be a profit or a loss. That is going to come in the reserves and surplus. Normally, what else can come is you can have various types of reserves: general reserve, share premium, opening balance or profit and loss account. All this can come in reserves and surplus, but we don't have any of these items in the problem today. Okay, so I'm going to go on now to the next one. The next one is, if you remember, the next in the format is long-term borrowings. Okay, we come now to non-current liabilities. The first thing is long-term borrowings, and I think we have one item in long-term borrowings that is not here. I think it was in the next problem. Okay, we don't have anything under long-term borrowings here. So if you don't have anything, you don't need to prepare a note for it. Okay, if you don't have any item, you don't have to prepare a note for it. Then after long-term borrowings, then we had other long-term liabilities. Again, we don't have anything here in other long-term liabilities, so you don't need to prepare a note. Okay, so after other long-term liabilities, then we have long-term provisions. Again, there's nothing in this problem under long-term provisions. So we are done with non-current liabilities. We don't have any other items. We don't prepare the note. Then we come to current liabilities. Current liabilities, the first thing is short-term borrowings. Again, we don't have anything under short-term borrowings here. Okay, it was all in the next problem. Then we have trade payables. Now, do we have creditors here? We had trade payables. Yes, we have sundry creditors here. So I'm going to prepare a note for that, for trade payables. So my note 3 is only going to be trade payables. Trade payables, which is the sundry creditors, which is going to be 30,000, which is 30,000. It's given to us as 30,000. Okay, here sundry creditors are 30,000. So short-term borrowings, we didn't have anything. Trade payables, we had sundry creditors. Then we have other current liabilities. Okay, under that also we don't have anything. Other current liabilities, and then we have short-term provisions. Again, we don't have anything under. Okay, so we just had one note, just of trade payables. Okay, now we move on to the assets part. So the first thing that we have is non-current assets. Under non-current assets, you have fixed assets, and under fixed assets, there is tangible assets. Okay, so I'm sure there are tangible assets here. So we are going to have note 4 as tangible assets. Tangible assets, and what are these tangible assets here? The tangible assets given are here. We have furniture 12,500, building 3 lakhs. Let's put those items. There is no depreciation also mentioned. That depreciation which is mentioned will come only in the profit and loss account directly. There's nothing mentioned in the adjustments. So we have furniture, which is 12,500. Then we have building, which is 3 lakhs. And we also have, if you see here, furniture, building and land, which is 2,58,300. 2,58,300. 2,58,300. Okay, so if we total this, we are going to get the total first. 3 lakhs plus 2,58,300 plus 12,500 comes to 5,78,000. This is the total of this. Okay. So that's our tangible assets. Now this came under fixed assets. Under fixed assets, we have tangible assets, intangible assets. I told you that capital work in progress and all is not applicable to our problems. Okay. Then after that, we have non-current investments. Fixed assets is the first item. Then we have non-current investments. We don't have anything under that as well. Okay. Then we have long-term loans and advances. Nothing under that. Okay. So that is done. We are done with the non-current assets. Coming to the current assets, we have items like, first thing is current investments. The first thing is current investments. We don't have anything under current investments. Inventories, after that is inventories. So inventories we surely will have. So note 5 will be inventories. Inventories will always be there because you have to have your closing stock. Inventories will be the closing stock. So we have 3 items, I think, here. Yeah. Stores and provisions, 3,000. Coal and gas, just copy this itself. So we have stores and provisions, which is 3,000. Then we have coal and gas, which is 1,000. And we have minerals, which is 2,000. This is the provision. So the total of this will come to 6,000. So the total inventory is 6,000. Okay. So we are doing current assets now. Current assets, the first item is current investments. Then we have inventories. Then we have trade receivables. I think we have something under trade receivables. Yeah, we have debtors 10,000. We have something under trade receivables. We have debtors of 10,000. Trade receivables. Debtors 10,000. Debtors are 10,000. Okay, next in the format is cash and cash equivalents. We have two items here, cash in hand, cash at bank. Cash at bank, 60,000, cash in hand. Cash and cash equivalents, note 7. Okay, so we have cash at bank here, the first item. Cash at bank, and the amount is 60,000. Similarly, we also have cash in hand, and cash in hand is 1,02,500. Cash in hand is 1,02,500. 1,02,500. So the total here comes to 1,62,500. Take this inside. 1,62,500. Okay. So cash and cash equivalents are done. Then we have short-term loans and advances. I don't think we have anything under this. That we have only in the next problem. Short-term loans and advances, there's nothing here. And the last thing is other current assets. Here we have some items, other current assets. Other current assets, note 8. Other current assets. Okay. So the first thing that we have is now all those china, cutlery, all that will come here. Cutlery is 7,000, linen and bedding 25,000. Cutlery is 7,000. Linen and bedding is linen and bedding is 25,000. Glass and china 10,000. 25,000. Glass and china 10,000. Glass and china is 10,000. Okay, then we have yeah, I think that's it. So you see we have taken cutlery, linen and bedding, glass and china 10,000. All this we have taken. This comes in the opening stock. Yeah, I think we are done with everything. So we can total this. So the total here is, so not underlined, 25 plus 10, 35, 35 plus 7 is 42,000. Okay. So we are done with the balance sheet notes. I won't transfer it yet. We'll do all the notes and then transfer. Okay. Now, when we say continue, you may have done this. We continue with the numbers. So note 8 was the last balance sheet note. Note 9 will be the first note for profit and loss account. So coming below the profit and loss account, I will say note 9. Note 9. Control. Now, the first thing in the profit and loss account statement and profit and loss account is revenue from operations. Okay, please learn the format. Knowing the format is very important. Revenue from operations, and not only from this year point of view, but you have this even in TY, especially those who opt for accounts. You have final accounts, not of hotels, but of general businesses. So, knowing this format, learning this format well now will help you next year as well. You'll be better versed with the format. So, learn the format. Okay, even though it's an online exam and all that, but see that you kind of try to know the format. Now, revenue from operations will have all these items here. We'll have charges received. Okay, all these charges received. I don't think we have anything mentioned as sales, so this is what it's going to have. Meals 2,64,800. Meals 2,64,800. 2,64,800. Then we have rooms 60,000. We have rooms 60,000. Rooms are 60,000. Then there is miscellaneous 22,500. Miscellaneous 22,500. Then we come to sales. All these are incomes that the hotel has received. Minerals 12,500. Minerals 12,500. Then there are two more items. Sorry, just one more item. Spirits 5,500. Spirits are 5,500. Spirits 5,500. So the total here comes to, the total revenue from operations comes to 3,65,300. 3,65,300. 365. Okay, 365, 300. Then the next thing is other income. Revenue from operations is the first item. Other income. I don't think we have anything under other income in this problem. Okay, so now we directly move to cost of the expenses, and the first thing under expenses of cost of materials consumed. Now pay attention how you calculate this, because you'll said that you'll have not done the formula of cost of materials consumed. So our note 10 is going to be, our note 10 is going to be cost of materials consumed. There's nothing under other income. So we directly move to cost of materials consumed. Cost of materials consumed. Okay. Now, if you remember yesterday, I was explaining to you. If you see the opening stock, you have stores and provision, coal and gas, minerals. If you see the purchases, you have stores and provision, coal and gas, minerals, plus you have meat, fish, and poultry. And if you see the closing stock, stores and provision, coal and gas, and minerals. Remember, the formula that I gave you is opening stock plus purchases minus closing stock. For each of these items, we need to calculate this opening stock plus purchases minus closing stock. Okay, so for each of these items, we need to calculate the cost of materials consumed and then total it. Okay, these two I told you, since they don't have opening stock and closing stock, I will put them directly in the purchases. These two, meat, fish, and poultry. Okay, so let's start with that. Cost of materials consumed. So I will put it as opening stock. The first one is opening, I think it's provisions. Opening stock of stores and provisions. Opening stock of stores and provisions. Opening stock of stores and provisions. Okay, so that is, we have it as 2,000. 2,000. Add purchases. Even next year, you all will be doing this like this. So pay attention to this. Add purchases. Now, purchases of stores and provisions are 35,000. So add 35,000 there. Add 35,000. And less closing stock of stores and provisions. Closing stock of stores and provisions. And the closing stock of stores and provisions is 3,000. Okay, so it gives us cost of materials consumed uh, for provisions, stores and provisions. So it will be 35, 37, 37 minus 3 will be 34,000. So for each of these, we will calculate and then I put together the total. Okay, so similarly, we have to calculate now for coal and gas. I think the second one is coal and gas. Yes. Okay, so second one is coal and gas. Opening stock of coal and gas. And that is 500. Purchases are 7,500. This is 500. Purchases are 7,500. Okay, and the closing stock of coal and gas is 1,000. The closing stock of coal and gas is 1,000. So the total of this comes to 7,000 plus 500. 7,500 plus 500 is 8,000. 8,000 minus 1,000 becomes 7,000. And then we still have another item, minerals. We still have another item, minerals. The opening stock of minerals is 1,000. Purchases 5,500. Closing stock is 2,000. 1,000. Purchases are 5,500 and closing stock is 2,000. So opening stock of minerals, purchases and closing stock of minerals. So that comes to 5,500, 6,500 minus 2,000 will be 4,500. Okay. So this is going to give me the cost of materials consumed, the total. So that will be 34 plus 7, 41. 41 plus 4,500 will be 45,500. Is this understood? Anyone has any questions with regard to this? Does anyone have any questions with regard to this? Okay, so I will go to the next thing now. Next thing I'm going to show is purchases. Cost of materials consumed. Then we have purchases. Note 11, only those purchases that I have not taken here. Okay, and that is meat and fish, which is fish and meat, fish and poultry, 28,000 and 25,000. Meat, fish and poultry. So that comes to 28 and 25. 28,000 and 25,000. So the total of this comes to 53,000. The total of this comes to 53,000. Then we have meet purchases. After purchases, we have changes in inventories. Now, I told you changes in inventories is the difference between the opening stock and closing stock, but we have already taken it here. Now, normally when the changes and in inventories, the item will be there when you have stock of finished goods. They clearly mention stock of finished goods. Okay. Normally, closing stock of raw materials is taken in cost of materials consumed. I'm not going into that, but in our problems, we won't have changes in inventories. Okay, the difference between opening stock and closing stock. So just remember, we are only going to calculate cost of materials consumed. But next year when you're doing, you will have changes in inventories. It's more, when we talk about cost of materials consumed, we are talking about more of raw materials, opening stock of raw materials, purchases of raw materials, less closing stock. But when we talk about changes in inventories, we are talking about stock of finished goods. See, when we talk about manufacturing concerns don't buy finished goods because they're buying something for further production. Okay, so it's normally considered as raw materials. So I'm not going to go into the detail of that. That will be more elaborated on next year. So my next note will be employee benefit expenses, 12. Employee benefit expenses. Employee benefit expenses. I think we have some salaries or something like that. Employee benefit expenses. We have salaries and allowance and wages, 42,000 and 50,000. 42,000 and 50,000. 42,000 and wages 50,000. So this comes to 92,000. This comes to 92,000. Okay. Then we have finance costs. We don't have any finance costs here. There is no interest at all. Okay. Finance costs. And then we have depreciation. Now I told you yesterday, this is not going to come under depreciation. Okay. Why? Because it's put as repairs and depreciation. If it was put under depreciation and repairs, then we would have taken it under depreciation. But this is going to come under other expenses, repairs and depreciation, because the main chunk here would be repairs. Okay, so we'll have a huge note for other expenses. All these things will have to be taken. Other expenses, note 13. Other expenses. So here we have salaries, sorry, not salaries and allowance, electricity and charges. Electricity something. Electricity charges 5,000. Electricity charges 5,000. Then we have rates and taxes, I think. Yeah. Rates and taxes, general charges. Rates and taxes are 20,000. General charges 14,500. Rates and taxes 20,000. General charges 14,500. And finally, we have the repairs and depreciation. All these items are taken. We have repairs and depreciation. Repairs and depreciation. Just put these a little inside. Now under repairs and depreciation, we have some items. So we have building under it. building, I think. Then we have building, furniture, cutlery, glass and china. Building, furniture, cutlery, glass and china. Furniture, cutlery, cutlery, glass and china. Okay. So let's see the amounts. Building is, the amounts are 12, 8, 1 and 3. 12, 8, 1 and 3. 12, 8, 1 and 3. And the total of this comes to 24,000. The total of this comes to 24,000. And this total will come to 44,000, 48, 58, 58 plus 3, 63, 500. 63, 500. I think so. 44, 48, 58, yeah, 58 plus 5 is 63, 63, 5. Okay, so we are done with all the notes now. This was the last note. Now we have to transfer these items to the statements. So we will start with the share capital. So we have calculated, we have to put it now in the format. Okay, the first part is equity, equity and liabilities. Equity and liabilities. Under that we have shareholders funds, shareholders funds, and under shareholders funds, sorry, the first thing that we have is share capital. Share capital. Okay, we already know share capital. The note number is 1. The note number is 1 and the amount is 6,50,000. You can check that. 6 lakhs, sorry, I put it as 65 here. It is 6,50,000. It's 65,000 equity shares of rupees 10 each. 6,50,000. Then we have B. We have B, which is reserves and surplus, which we are yet to fill because we have to wait for the profit and loss account. But this will be note 2. We'll have to come back to this. Okay, so that's it under first part, shareholders funds. Then we have non-current liabilities. We don't have anything under non-current liabilities. Okay, we don't have anything under non-current liabilities. So I directly move to current liabilities. I directly move to current liabilities. And under current liabilities, I think we have just one item which is trade payables. Note 3. We'll just check it. Yes, we have just one item which is trade payables, note sundry creditors, and the total of that is 3,000. Okay, so 30,000. That's it. So we will have to total this. So I will just leave a line for the total. I will just leave a line for that total. Once we get all the figures, we will total. Okay. Now moving on to the assets part. Okay. We have assets. Under assets, the first thing that we have is non-current assets. Non-current assets. And under non-current assets, columns here. Under non-current assets, the first thing that we have is fixed assets. Okay. Under non-current assets, the first thing that we have is fixed assets. And under fixed assets, learn this bifurcation. The first thing that we have is tangible assets. Under fixed assets, the first thing that we have is tangible assets, and our tangible assets are 5,70,800. 5,70,800, which is note 4. 5 lakh 5,70,800. Okay, there's nothing. Fixed assets has the intangible assets, but we don't have anything. So fixed assets is the first thing under non-current assets. Then you've got those long non-current investments and all that. We don't have anything. So we directly go now to 2. Okay, that is current assets. Current assets. Now under current assets, the first thing that is there is we don't have it. Okay, current investments. We don't have current investments. Then we have inventories. So our first item will be inventories. After inventories, we have trade receivables. Trade receivables. Then we have cash and cash equivalents. Cash and cash equivalents. And finally, we have so the item there, short-term loans and advances, we don't have anything. So the last item is other current assets. Okay, here even though the format mentions it, you don't have to write all the items. You write only the items which are there. You don't have to write all the items. So just put in these figures down. Number 5 is 6,000, 6 is 10,000, 6,000, 10,000. Then we have 162, 500 and 42,000. 162, 500 and 42,000. So that will give a balance sheet total actually, but I cannot total it right now because we do not know the amounts yet. We don't know the reserves and surplus. So for that, we will have to prepare the profit and loss. So I move now to the profit and loss account. The first thing here is revenue from operations. Revenue from operations. Okay, this would be note number now. Note number 9, 3,65,300. Note number 9, 3,65,300. Okay, we don't have anything under other income, so we don't need to write other income. This will give us our total revenue. This is going to give us our total revenue. Just check how I'm writing this. Okay, this is going to give us our total revenue. Here the total revenue would normally be 1 plus 2, but we don't have anything under other income, so it's going to be 365,300. 365,300. Okay. Then we come to expenses. Expenses. Now under expenses we have the first thing that we have is cost of materials consumed. Cost of materials consumed. Then we have purchases. We do have purchases here. Changes in inventories, I told you, won't be applicable in most of the problems for us. Okay. Then we have employee benefit expenses. Finance costs, we don't have anything. Depreciation also we don't have. And then we have other expenses. Okay. So I will just go on with the notes now. This would be note 10, 11, 12 and 13. So transferring these items, we have cost of materials consumed is 45,500. 45,500. Purchases are 53,000. Employee benefit expenses are 92,000 and the last one is 63,500. 92,000 and 63,500. This will give us our total expenses. Like how we have the total revenue, we'll have our total expenses. Total expenses would be the total of all this. That would come to, just total that, 45,500 plus 53,000 plus 92,000 plus 63,500 comes to 2,54,000. 2,54,000. We don't have any tax provision for tax in this problem, so we can directly calculate our profit. Number 3 would be, these numbers will change as you have the items, okay? Profit for the period, which will be 1 minus 2. Okay, and that would be the final answer. So the total income is 3,65,300 minus 2,54,000 comes to 1,11,300. 1,11,300. And this 1,11,300 we have to transfer to our reserves and surplus. Okay, it's going to be here profit. I can say net profit for the period. Net profit for the year or for the period, which is 1,11,300. 1,11,000, and this we transfer to the balance sheet and check if the balance sheet tallies. 1,11,300. I don't think I'll leave the space. So let's check the balance sheet total. This comes to 6 lakhs 50, 7 lakhs 50, 7 lakhs 61, 7 lakhs 91, 300. This tallies to 791, 300. And same way, hopefully this also tallies. Let's check. 5 lakhs 70, 800 plus 16,000 plus 162, 500 plus 42,000. 791, 300. 791,